X. Are we on X yet? All right, that one's not going to work. Come on. Come on, come on, come on. Now touch me, baby. What are we looking at here? Docs. Controls. No. Where the hell's my chats? I can't chat. Username. There we go. Okay. Okay, now that's not going to do me any good. 729102. 729102. Okay. Password. What the hell is my password? Okay. Continue. There we go. Why is this one taking so long to freaking charge? Incorrect password. Uh-oh. Okay, so much for that idea. Why isn't that thing freaking charging? Okay. Almost there. I forget how to do this. How did I do this? Okay. Okay. Restream. OBS, display settings, extended play, eShare. Where's my eShare? Okay, make sure eShare is TV mirroring. Okay, do not change small screen for eShare. Okay, I think we're ready. Connect. TV mirroring. We got one more. It's not freaking turning on. Why isn't this one turning on? Hold on, I'm still getting there. That one's on. That one's on. All right, I got one camera left, and that's it. But we're going to get started anyway without that last camera. So it is what it is. What do we have here? Okay, you go over there. Put that there. Docs, loads, lock doc, scenes, blah, blah, blah. Audio control stats. Why aren't I getting that? Scripts, no. Help, no. Rename, export, profile, docs. I don't see it. All right, not quite sure how to fix it. Just going to have to deal without it. All right, so that being said, good evening. Why is that being that way? Why? Okay. Is that it? No, that's worse. Damn it. All right, that's going to have to do. It's going to have to do. All right, so what do we have here? There we go. Last camera. There we go. No. How many times is that going to pop up? Good evening, everyone. My name is James. This is Dividend Stock Talk. Got to get this camera rolling. That one's going live. All right, we want to go that way. No, wrong way. this way. Here we go. That one. Live. I think they're all good. All good. Right there. All right. Waiting for this one to open up. Ass Monkey. Teresa. AJ. Let's go there. Come on. The volume. Okay. Live. Come on. And live, there we go. And let's do this. Almost ready, almost ready. There we go. And there we go. All right, hey, Jules is there. Almost ready. Almost ready. And this camera is right there. All right, all right. So let's do this. Dismiss. Do that. Do that. Do this. And do that. That's it. We are all rolling. Uh-oh, this one. Didn't do this one yet. Well, here we go. Sheldon, Phil. All right, so what's going to happen here? One of them's going to want on. Okay, they're both on. All right, cool. Alrighty. We get all our cameras working. 1, 2, 3, 4, 5, 6, 7, 8, 9 cameras. 13 different channels. Jessica, do you need help with funding? Oh, of course I do. Thank you there, Jessica. Anyway, we'll worry about that another time. I paid for my cat's vet visit. Uh-oh. Kroger was an awesome trade today. Cool beans. Glad you liked it. Doesn't always work that way, but it's good that it did this time. All right, so that being said, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks. Now, what do I mean by pre-qualified dividend stocks? Well, pre-qualified dividend stocks, in my humble opinion, any company that has consistently been profitable for at least 2 decades. That's 10, 20 years. Consistent profits, higher and higher and higher. That's what I'm looking for. Companies that are consistently profitable, do a quick, simple trade, get me 1% every week. Yes, I know, 1% a week is over 50% by the end of the year. And I am perfectly okay with 50% by the end of the year. That being said, let's see who's in the house. Who do we have? We have Mile High Process. Good evening. Who else do we have over here? That's it. Mile High. Okay. Call Me Hyde. Good evening. Good evening. Vinto Cool. Good evening, Vinto. Nick. Good evening, Nick. Ruben's here. Nobody there yet. What do we have down here? We have, well, a lot of people showing up here. All right, who do we have? Ass Monkey, Teresa, John, Gavin, Edward, Evan, Don, Cole. Okay, Don. All right. Where were we?
Hey, James.
Chris, Dell, what?
Your screen is blocked on the Trading View screen.
Screen is blocked on the Trading View screen.
Like, it says share your screen on the YouTube one.
On the YouTube one. Okay, thank you. Let's see what that one looks like. Ah, damn it. Share my screen, huh? All right, let's go quickly take a look at what's going on over there. Okay, let's get out of that. Let's go to there. Alrighty. Get these little kinks out of the way. Oh, that one! Okay. Okay. So, let's see if I can fix that. Okay. That might do it. I'm not 100% sure. All right, give it a few minutes for it to reset, because it does take a while for it to go into space and come back down again. Lucky, what's happening? Oh, come on. What's this one? This one is just me.
Oh, come
okay.
on.
Let's go back. What's this one? Okay, this one right here. Okay, so why is that like that? Damn. Shit. Jacob's supposed to fix this. I'm not quite sure if that's it or not. Is it? Hey, yeah, it is. Okay, how does that look? What's this one? This one is just me. Okay. Wrong one. See if it comes up next. What's this one? Okay, this one right here. Okay, so why is that like that? Okay, give me a second. I'm trying to figure out a few things. I'm not very, what do you call it? Jacob's supposed to fix this. Yeah. Is that it? That looks like it. All right, looks like she's fixed. Okay, I'm not quite sure if that's it or not. Is it? All right, that's it. It is. All right, that being said, all right, so hopefully that's it. Let's see what we're looking at this morning. Sorry about that. Vinto, good evening. Sorry about that. Safe, dependable. Pine, how you doing? The 10-minute straight chat. Got it. Wrong one. See if it comes up next. Uh-oh. I don't need that. Okay, this one right here. There we go. Don't need the echo. Okay, all right, so let's keep looking who's in the house. Thank you, Side Hustle. Okay, give me a second. Where are we looking for? Who else is here? Who else? Bomb. 19. Oh. Kimikaze. Dan Lees. Okay. Weave. D. Victor. Gavin. Jonato. That looks like it. Phil Shepard. Edward. Okay. Albert. That's it or not. The Crazy Craft. Okay. The Quam 001. Okay. Not quite sure I'm familiar with that. All right, that being said, all right, so hopefully that's it. Cozy. Let's see what we're looking at this morning. Sorry about that. David Z. Good evening. Sorry about that. OG. Safe, dependable. Pine, how you doing? The 10-minute straight chat. Ibram. Good evening, Ibram. Mike. David. Gecko. Phil. Maple Leaf. Moneybag. All right. Don't need the echo. Phil. Very nice, Kaz. Looking who's in the house. All the way. Okay, cool. Very nice, Kaz. Okay, thank you. Hello. Kelvin. 19. Oh. Renovate right. Rocky Canuck. Okay. Weave D. Victor. Gavin. 6'2" tattoo. Okay. Alpha. Hello. Edward. Peter Guzman. Albert. Upload. The Crazy Crap. Sunshine. Good evening, Sunshine. Bonsoir. Bonsoir et tout bonsoir. HK Mike. Hello from Riverview. Muha Gadget. Cam, nice to see you. Hi, do you need a website or any bots? Of course I do. Send me an email. Or DM me, one or the other. Ibram. Eve. Good evening, Miss Eve. Thank you there, Miss Eve. Phil. Nice to see you, Phil. Glad that you're home. Moneybag. Don't get me wrong. I love New York. It was great. Wouldn't want to live there, but I'd love to visit. I'd like to go back there sometime. Next time I go back, remind me to bring 3 times the amount of money I brought with me. I was only there for 3 days. I figured I brought enough. But apparently, no. I took a carriage ride, and the carriage ride was great. Okay, but then I took one of those e-bike rides. Not an e-bike ride, kind of like a tuk-tuk, three-wheeler electric bike. Took that for a spin, like $260 to drive 5 miles. What shit, Louis, Bull, let's take a look at the Bull. Do you need a website or any bots? We got some feedback over here, so I'm going to mute that out of there. One or the other. Louis, we'll take a look at Bull in a second. Eve, thank you for that. We'll pull a Bull right now so we can get to it in a minute. It was great. Wouldn't want to live there, but I love to visit. I'd like to go back there sometime. There it is. Next time I go back, there it is. All right, outstanding. SMCI. Holy cow! I was only there for 3 days. I figured I brought it. AJ, Mama, how you doing? Oh, hi from London, Greg. All right, we're going to take a few of these questions, and then we're going to go back down. And did I have a guide watching for months? But then I took one of those. Do I have a guide? Oh, I thought, because I just got back from New York. I figured, did I have a guide in New York? No, I didn't have a guide.
Took that for a spin.
Hold tight. Now, AJ, Mama, do me a favor. Drop me your number. I'll give you a buzz and we can chat. Then we have a better idea of what it is you're looking for. So maybe I can help you out a little bit better. Maybe mute that out of there. Let's keep on going. First one on the list tonight is going to be bull. B-U-L-L. Now remember what we're looking for. Simplicity, safety, predictability, profitability. Ooh, easy. We want it to be easy. Okay. Now, here we go. First thing. Anytime I look at chart. Any chart. Any chart. Uh-oh. AJ, Mama, how you doing? Oh, hi from London. Greg. All right, we're going to tilt this one just a tiny bit. Nobody's even in that. All right. First thing, I'm looking for 5 things. And it should take anywhere between 2 and 4 seconds. So you see all 5 things. Let me tell you what they are and see if it makes sense. You ready? Number 1, the high. Number 2, the low. Another easy one. Number 3, where was it a year ago? Let's keep on going. First one, easy breezy. Number 4, where is it now? Again, what we're looking for is something difficult. Number 5, this is the hard one. You ready? Up, down, up. That's it. 2 to 4 seconds. Now, here we go. First is anytime I look at that's it. If it passes that, we go to the next step. But before we do, what are we looking for here? Well, besides the obvious, where's the high of the year? Where's the low of the year? Where was it? Where is it? Where's it going? I'm looking for 5. What does all that mean? Well, number 1, I don't want to buy at the high of the year, which is right here. So you see, I don't want to buy at the high of the year. I want to buy near the low, number 1, because I want it to hit the bottom and then go back up again, because that's what happens. Stocks drop, and then they turn around and go back up again. Great, that's what I'm looking for. Okay, but more importantly, I'm looking for this tiny little section right there. Number 4, because that's the last 30 days. And for me to find out what is the stock going to do tomorrow, the next day, and the next day, that's it. Well, this is more important because this is today, yesterday, the day before, and this is last year. If it just gives me an idea of where the money is going. Where are the investors buying? What are they selling? What is the flow? Okay? Once we get past there, we're going to go to step number 2. Step number 2 is a little bit more challenging because we're looking to see are we going to be profitable. Now, you got to sit with me for a minute or two because it's going to be a little bit more challenging to figure this out. Now, I'm looking for 1%. What happens? 1% of whatever stock I buy. All right, so if I'm buying this one, $6.86. What's 1% of $6.86? It's right around 7 cents. Okay, you move the decimal point over to place is 7 cents. That's it. Well, okay, so the 7 is more important because this is today, is going for 14 last year. That's 2%. Right off the top of my head, 2%. I'm looking for 1 because 1% every single week is 50% by the end of the year. Okay? So what's 2% every single week? Isn't that 100%? Isn't that doubling my money if I can get 2%? If I can get 2%. Now, okay, so for a minute or two, because everything looks good. Now this looks good. It's wonderful. Let's zoom in a little closer because I want to see what the last 30 days look like because the last 30 days, again, give me a good idea of what the next 30 days are going to look like. 14, right there. Here we go. So, here we go. The 30-day chart. Last 30 days, the last 4 weeks. Okay, so here's the top. Here's the bottom. Here's where it was. Here's where it is. That's 2% down. Now she's going up. I'm looking 30-day high because 1% 30-day bottom. Now she's going up. Now look how much space we have. Here's the top right here. We only have that much space every single week. But it's a $6 stock. We're looking for 7 cents. It's at $6.86. if put 7 cents on top of that, right where we want to be. Great. So let's do this one for the first one of the week. We did some yesterday, and it's on a book that's still haven't unpacked. Believe it or not, we landed in Tampa around 7:15, and it was an hour ride home, and it takes me about an hour to unpack everything and get everything all set up. So I'm a little late tonight. Sorry about that. All right, let's get rid of this. First thing we're going to do is we're going to change this.
Here's the top from single to covered call.
Now, the reason why we're doing covered call and not any of these strategies, because this was created for my 9-year-old daughter. When she was 9, she said, "Daddy, can you teach me?" So the simplest and easiest strategy is buying a stock. But there's a major flaw with just buying a stock. You have to wait and wait and wait and wait for it to move. Well, this strategy here, it's on a book. Covered call, covered stock, put buy right, whatever you want to call it, where I buy the stock, I sell someone the rights to buy it from me at a certain price by a certain date. So, the certain price, let's get rid of this.
Price.
First thing we're going to do is we're going to change this.
Price from single.
The second is called the expiration date.
Covered call and not any
18 June, that's, let's go over this side so you can see. 18 June is this Friday. 26 June, let me get rid of this for a second. Can you teach me? So the simplest and easiest strategy. I gotta remember, I got different screens here. But there's a major flaw.
18 June is this Friday.
You have to wait and wait and wait.
June is next Friday. It's 2 Fridays away. 2 July is 3 Fridays away. 10 July, 4 Fridays away. 17 July, 5 Fridays away. So on and so forth. Strike at a certain price, the agreed upon price. So I'm buying it for $6.86. I want to sell it. And who I sell it to, we have to have an agreement. If I buy it for this, $6.86, I'm going to sell it for $7. Strike price, $7, right over here. That's what I want to do. So, strike price, the agreed upon price I want to sell it for, the expiration date, the date the option expires. So I'm going to give you the opportunity to buy it from me at an agreed upon price by a certain date. And it's up to you, if you buy the option, to either do whatever you want with it, exercise it, don't exercise it, sell it, whatever you want to do. Before it expires, 18 June, this Friday at 3:59 p.m. Let's erase that for a second because it's a holiday this Friday, so we have to have an agreement. 3:59 p.m. on Thursday. All right, so 3:59 p.m. Thursday, that option is going to expire. Do something with it, don't do something with it. It's totally up to whoever buys it. That's it. Whoever buys it. But what I'm doing is I'm selling options. I don't buy options because most options expire worthless. So I'm hey, Dr. Corey, how you doing? Hey, hold on. Baby get here yet? Did the baby get here yet, Doc? If you buy that, I'm gonna ask Julie. Hold on a second. Whatever you want with it, exercise, don't exercise, sell it, whatever you want to do. Before it expired, I want to know, did the baby get here yet? At 3:59 p.m. Isn't Friday the 19th? It's a holiday. Good question. So we have to have an agreement. 3:59 p.m. Oh yes, Friday is the 19th. So 3:59 right here. All right, today's Monday the 15th. 16th, 17th, 18th, Thursday. Friday's the 19th. Yeah, so 18th. 4 days away. Okay. A random walk down Wall Street. Great book. Most options expire. Oh, didn't know that. Hey, all right, so Julie's going to talk to Doc. See if the baby came yet. Anyway, besides the point. All right, so let's get back to where we were. So I like the company. Get here yet, Doc? If you buy that, I'm going to ask Julie. We do a covered call at 7. There it is right there. Let's do just one so you understand how it works and what the numbers look like. Let's check it out. All right, the 7. There it is right there. Would you believe I need my
Friday the
glasses?
19th.
I kid you not.
Good question.
The monitor over there is bigger than the
Friday
monitor
the
right
19th.
here. This one is here.
All right, today's Monday the
55 or
15th.
60 inches. And that monitor is bigger, but it's 5 feet away. I need glasses to see 5 feet 4 days away. Don't get old. No fun at all.
A random walk down Wall Street.
Everything's falls apart the older you get. It's just,
Didn't know that.
golden years,
So
some
Julie
parts
is
are
gonna
golden,
talk
some
to
parts
God.
aren't. All right, so anyway, let's do just
All right,
one
so let's go back
contract.
to where
Let's
we were.
change that to
To
2.
one, then we'll read it out, see what it looks like, see if it's going to be profitable, see if we should do it. I can't tell you what to do. You got to figure it out your own, but here it is. I always tell everybody, when you're doing this, take your time. Check it out.
Read the order before you send
There it
it.
is right
Okay?
there.
Send
Would
button.
you believe
I can hit that send button.
It's going to go.
But I want to read it first to make sure it makes sense.
Here we go.
Is bigger than the
My one
monitor
covered
right
call.
here. Bull. That's Weeble.
55 or 60 inches.
Weebles, well, that they don't fall down. What? But it's 5 feet away. I need
Girl?
glasses to see 5 feet.
Cool
Don't
beans.
get old. No fun at all.
Baby girl. Way to go, Doc. Baby girl. All right. One covered call. Weeble.
18 June. That's this Thursday because there's nothing on Friday.
The $7 call option. Well, the profit's going to be $28.
Looks like
Not a
see if it's
lot,
gonna be
but hold on.
profitable.
Because the profit is not the
I
important.
can't tell you what to do. You, gotta
You
figure
may
it out your own,
think-
but here it is. I always
You
tell
may
everybody
think
when
the
you're
profit
doing
is the important part.
It's not. The rate of return is the important part.
I can hit that send button. It's going to go.
Hold on, but I want to read it
All right,
first
wait a
to make
second.
sure it makes sense. Bigger than the
My one
monitor.
covered
AJ
call.
got that one. Got that one. Got that one. Christopher Hall. I'm gonna get to that in a second. No, Christopher, don't do that, man. That's just unprofessional. I hate when people do that. I do. You call them poachers. Okay, every once in a while. Now, before I move on, I want to say something. Okay, This Thursday because there's
Um,
nothing on Friday.
anytime you're online, okay, my show, whatever show, whatever. If you're online, you're looking at something, you pique your interest. Great, because the profit. But be wary, leery, whatever you want to call it. Of fraudsters, pranksters. It's not. What else? Well, the rate of return. Scammers. That's a good one. Scammers. Okay. If you think, are you watching World Cup? No, Jack, I'm not. Okay, I'm a player. I'm not a watcher. I play the game. I don't watch the game. We'll get to that in a second. Okay. What about NVIDIA? We'll get to that in a minute, Jeff. So as I was saying, you're here. I'm live. You hear my voice. You hear my energy. You see it. Great. If you think now, before you're having a conversation through email, through text message, through WhatsApp, through what's the other one? Telegram or anything like that? My show, whatever show, whatever. If I don't do that, you want to have a conversation with me, drop me your phone number, send me your phone number. Don't put it on the screen. Whatever you want to call it. DM me, okay? Because my email is available on each and every single one of these platforms. Scammers. If you want to have a conversation, now I love talking to people, and I guarantee you, I'm not going to try to sell you anything. As a matter of fact, I'm not trying to sell Jack. I'm not. We're going to go through the whole night, and I won't try to sell anything. I play. Want to buy something? That's up to you. We're all adults. How it works. What about not the point? Anyway. So as I was saying, you're here. The profit. I'm live. Is not the important part. You hear my energy. Okay. Great. Profit is the important part. The rate of return is the important part. How much am I making through my investment? Is it worth my while or is it not? It's actually that simple. So, now remember the part where I said simple, safe, don't put it predictable. Predictable is the important one. Because I know what my profits are each and every single one. I know what my investment is going to be. What I don't know is the rate of return. Figure that out. I love to need that people and a calculator. Let it go. Okay, I get a new setup. And the new setup. What about not the point? Anyway, kind of interesting. So as I was saying, you're here. The profit. I'm live. Is not the important part. Okay. Get out of that. Where the hell's the calculator? Of return. Where the hell is the calculator? How much am I making through my investment? is it worth my while or is it not?
There we go.
It's actually that simple. So now remember the part where I said simple, safe. Don't put it in.
I gotta find a calculator somewhere.
Predictable is the important.
Which is kind of weird. It's like
I know my profits for every
iPhone's right in front of me. All right, I think I might be able to do it this way.
What I don't
Let's
know
get out of
is
this for a second.
figure that out.
Let's calculator. Well, that's where the calculator is.
Let it go.
Right down here.
Okay, I get a new setup.
And right there. Calculator. There we go.
Interesting.
Calculator. Okay. Confirm and send. There we go. All right. So the calculator right here. All right, we take 20 L's to calculate by the investment. That's going to give us our rate of return. We're looking for 1%. Okay, I got a suspicion this is going to be right on there. Okay, so $28 is the investment. Wait. No, I can't use the calculator for this. I got to find a calculator. It's all Jacob's fault. 28. All right, I think I might be able to do it this way. Let's get out of this for a second. Hold on, I'm trying to find me another calculator. Let's calculator. Well, that's where the calculator is.
Let it go.
Right down here.
Okay, I get a new setup.
And right there. Calculator. There we
See
go.
if I can do it this way.
Calculator. Okay. Confirm and send. There we go. All right. So the calculator right here. There it is. Yeah, baby. That's going to give us our rate of return. We're looking for 1%. All right. Now I got my calculator. All right. Let's get rid of this. So $28 is the investment. Okay. 28. Took me a while to figure it out. Anytime we add new software, new hardware, I got to learn the whole thing all over again. It's all Jacob's fault. Gosh. Because when I first started, it was just one iPhone. Turn the phone on and just start talking. That was it. It was simple. It was easy. Now I got 8 iPhones, a bunch of monitors. Anyway. All right, so we're going to take the 28, the profit. We're going to take the profit right here. We're going to divide it by the cost of the trade, including the commissions and the fees, which is 672. That's not a lot. 672. All right, divide. There it is. 672 gives me a grand total of 4. Right. Now I got my calculator. Now for the first one of the evening, I like 4.1%. $28 is the investment. Okay. 28. Took me a while to figure it out. Hold on. Anytime we add new software, new hardware. All right. I got to learn the whole thing. So we're going to save this one. Jacob's fault. Gosh. Because when I first started, it was just one iPhone. Turn the phone on and just start talking. That was it. It was simple. It was easy. Now I got 8 iPhones. That's doing that. Bunch of monitors. It should be popping up there any second. Now, sorry about the bright screen. We have to look at it one way or the other. There it is. Right here. Webull. Divided by the cost of the trade, including the commissions and the fees, which is 672. That's not a lot. 672. All right, divide. There it is. 2 gives me a grand total of 1. Covered call. Now for the first one, Webull. B-U-L-L. 18 June 26. That's this coming Thursday. 3 days away. Right there. All right. Okay. So we're going to say the $7 call option. Here's the profit, $28. The investment is going to be $672 for 4.1%. All right. Now we know that 1% a week is over 50% per year. Sorry about the bright screen. 2% a week is over 100% a year. What do you think 4% a week is? Now, I'm going to be honest with you. I don't get 4% a week, and I've been doing this for a long time. But still, this one, 4%. Why the hell not? All right, divide. If you like Webull, of course. 1. 2 gives me a grand total of 4. Covered call. Now for the first one, Webull. B-U-L-L. 18 June 26. That's this coming Thursday. 3 days away. Right there. All right. Okay. So we're going to say the $7 call option. 1. Yeah, that's much better. 4.1. The investment. All righty. 672. Next. Okay. Gertie. Oh, Gertie, you know that 1% a week is over. Now, how you doing? SMCI? Let's take a quick look at it. 2% a week is over. What do you think 4% a week is?
Now, I'm going to be honest with you. I don't get 4% a week, and I've been doing this for a long time. But still.
All right, now we're going to change this back to single, and then we're going to do, what one was it? SMCI. SMCI. Not something I invest in. Okay, but what's happening with SMCI? Here's your top. Here's your bottom. Here's where it was. Here's where it is. Look at this. Down, sideways, down, up, down. Okay, what's going on right here? The last 30 days. Does it look like a good position? Well, the last 30 days would be right about there. Next. Okay, now remember what I'm looking for? If you've watched any of my videos before, I'm always looking for the same thing. 30-day high, 30-day bottom, here it is. 2 days to the upside, 1, 2, and on the third day, I will jump there. Well, all right, now, 1, 2, the third day is tomorrow. So is it going to be what I'm looking for tomorrow? Let's find out. What do the numbers look like?
Not something I invest
So,
in.
currently, we're at 30.85. So I got a choice. Do I want to do the 30.50 or do I want to do the 31? Well, the 31's paying 106 and the 30.50 is paying 127. But I'm going to lose 35 cents there, which means the 31 is a better deal. And look at this. She's going to go up.
Okay.
Now, remember
Based
what I'm looking
on
for? If you watch any of my
nothing
videos,
more than
always looking for
what
what
it
it
looks
looks
like.
like. Okay, so here's the previous 30-day bottom. She went from 29
upside,
up to 52.
and on the third day,
Now, do a little bit of arithmetic in your head.
Well,
29 to 52 is $22.
So is it
$22,
looking for
that's a big jump. $22 on a
$28
$28 stock. We're at 30.
What is that, 60, 70, 80%? That's a big one.
Okay, so she jumped up, profit taking. Now she turned around, going back up again.
It just makes sense. Either you like the company or you do not. Now, SMCI is not one that I would do. Let me show you why it's not something I would do. For that, we're going to go over to Yahoo Finance.
She's going to go up.
Okay. Now,
Based
remember what I'm
on
looking for? If you watch any of my
nothing
videos,
more than
always looking for
what it looks like. Okay, so here's the previous 30-day bottom. She went from... That ain't it. This is it right here. Yahoo Finance. And we're going to put in what? SMCI. Okay. SMCI. Now, I tell everybody, if you're going to be investing anything, you need access. You need little fingertips on a financial website. Well, what we're looking at here is Yahoo Finance. You can use Google Finance. You can use NYSE, the New York Stock Exchange. You can use the Wall Street Journal. You can use almost any financial website. Google Finance. You can use that too. But what am I looking for? I'm looking for financial information. Well, here we go. Super Microcomputers Incorporated, SMCI. Now, why is it that I don't like it? Well, do you remember the part where I said I want 2 decades of increased profits? Well, here's the thing. The name of the show is Dividend Stock Talk, where we look at dividend stocks and see if they're profitable or not. Well, think about it. If the company is profitable, they increase their dividends because the dividend is a portion of the profits that we get back. So as an investor, when we buy the shares, when we buy the stock, we become a part owner. And as a part owner, you are entitled to a portion of the profits. So here's the tricky part. You got 2 choices and only 2. Sorry, you got 2 choices. That's it. Growth stocks, companies that specifically designed to grow, or income stocks. So you want growth or do you want income? Now you can combine a little bit of each if you want growth and income, but it's got to be one or the other. Okay, so a dividend stock is an income stock, okay, where they give you part of the profits. Now, the growth stocks, they take their profits, put it back into the company, and it grows a lot faster. So make up your mind, if you're looking for growth, this is probably not the right place for you. Okay? Okay, Jared, we'll take a look at those, and I'm going to tell you why I don't do those in about a minute. So, let's go back to this for a second. Now, do you see something that not right?
there are no dividends in this time period. So what does that mean? Well, that means this is the growth company. They take all the profits, put it back into the company for capital growth. No income. Sorry, I'm retired. I need income to pay my bills. And when you get retired, whenever that's going to be, you need to come up with the money one way or the other. So it's either going to be your investments on your own or your Social Security, if that's going to be enough. Now, my Social Security is $585, $89, something like that. Crazy number. Enough to pay maybe my electric bill and my cable bill, maybe my phone bill. That's it. Not my mortgage, not my insurance, nothing like that. So I have to rely on my investments. Now, don't feel bad for me. I was self-employed. I had my own manufacturing company. So I got plenty. Don't worry about me. I'm good. Okay, but I do appreciate your concern. Thank you. So for you guys, you have to decide, what do you want? Do you want growth or do you want income? So SMCI is the growth stock. Not something I would do, but if you like it, hey, more power to you. Let's check out the numbers for it and see what jingles out. Okay, so SMCI, the 31s. Let's take a look at the 31s. Covered call, there it is. The 31, there it is. One contract. Now, I could show you 5, 10, 15, 20 contracts, but it's better to show you just one. That way you get a better understanding. Well, if one is going to cost me this, well, then I could do 72 of them. Or I can do 4, or I can do 3, or I can do 2, whatever. We're all on a different journey. You don't have the same amount of money as I have, and I definitely don't have the same amount of money as he has. I've seen his account. Like, yeah, that's nice. But he's been working longer than I have. And his professional was... All right, so anyway, here we go. One covered call, SMCI, June 18, 2026. That's this coming Thursday. The $31 call option. Well, look where the stock is right now. $30.85. Well, that's pretty close to 31, right? So if I buy it $30.85, sell for 31, I'm going to make $133, but I got to put out $2,900. Now, don't get scared about this number, $2,900. Let me explain to you in a little bit different metaphor. Do you remember what a metaphor is? Comparing two totally different products, but with the same kind of comparison. You know, like I slept like a log, cried like a baby, you know. As bumpy as a Harley going down a bumpy road. You know. Anyway, so metaphor. Think of it as creating weekly cash flowing assets. Okay, so the weekly cash flowing asset, I'm putting in $2,900. On this week, it's paying me $133. Great. Next week, it may pay me $150. May pay me $200. I don't know. But next week is a different story. But always, always, always never buy anything that you do. Okay, 5 rules. I'm going to get to those in a second. Never buy anything you do not want to hold on to long term. So let me give you the 5 rules. Now, remember the part where I said that this trading strategy came about when my 9-year-old daughter crawled up on my lap in 2008. Some of you may remember that. 2008, she said, "Daddy, what are you doing? Can you teach me?" So my 9-year-old little girl, battery is low. What the hell? So my 9-year-old little girl says, "Daddy, can you teach me?" So to teach a 9-year-old, it's got to be simple, safe, predictable, consistent, and no way for her to lose. That number 5 gets everyone. What do you mean no way to lose? Well, if you do it right and you pay attention, you shouldn't lose at all. Okay? Now, up until 2 weeks ago, I had 0 losses for the year. I went 5.5 months of trade. Now, you got to understand, I'm a professional trader, which means I trade over 20, 30 trades per week. Well, I got 7 accounts. So as a professional trader, I have 2 losses this year, 2 losses last year, and 4 losses the year before. So I'm not pretty good at what I do. But I'm not looking to hit a home run. I just want 1% every week. And if I can get 1% every week, I'm perfectly okay with it. So, rules are rules. Rule 1, never, wait a second. Simple, safe, predictable, consistent, no way to lose. That's the criteria to create the strategy in the first place. The 5 rules. Rule 1, never buy anything you do not want to hold on to long term. If you don't understand it and you don't want to own it for the rest of your life, don't buy it. Rule number 2, never sell at a loss. If you're thinking about selling at a loss, you did not pay attention to rule number 1. Never sell at a loss. Rule 3, this one you will see over and over again tonight. It happens every night. Everybody thinks they got a winner. Everybody thinks they're doing something right. Rule number 3, make sure the company is consistently profitable. Now, I want 2 decades. That's 20 years of increased profits. You may think that's a long time, but no. Stock market's been around since 1602. That's 424 years. I don't think 20 years is difficult. 426 years. 424 years. Anyway. Rule number 4, weekly options only. That's it. I don't do monthlies. No options, no thank you. Monthly, no thank you. Weekly options only. I want to get paid on a weekly basis. I'm retired. I got nothing else to do. It takes me 5 or 10 minutes. That's it. Rule number 5, make sure all the numbers work. Now, the number part is easy. What am I buying it for? What am I buying? Whoops, right there. What am I buying? What am I selling? How much am I collecting? And is it more than 1%? That's it. It's just a math problem. Never buy anything you don't want to own. Never sell at a loss. Make sure the company's profitable. Weekly options only. And make sure the numbers work. It's really not that difficult. It was created for a 9-year-old. I like to think that you guys are smarter than a 9-year-old. I like to think that. Doesn't mean it's true. All right, let's keep on going. So, yeah, SMCI. Let's crunch the numbers, see what it looks like. Get rid of this. Now, profit, 133. Okay, 133 divided by the investment. Remember, weekly cash flowing assets. Because at some point in time, remember, I'm trying to sell this at 31. If this thing goes up to 32, 33, 34, someone's going to buy it from me at 31. I'm going to get all my money back plus a little bit of profit, and I get to keep that. I get to get this every single week. But remember, it's separate. All right. Do you know how you heard the expression before, you're comparing apples to oranges? Well, here we are trading apples, oranges, and bananas, or peaches, whatever. Apples, oranges, and peaches. Apples, oranges, and bananas, whatever. So, the stock, the apple. The dividend, the banana. Okay? The premium, the orange. Apples, orange, banana. However you want to look at it, same thing. Just now, 7 pounds, 7 ounces. Awesome! What's the name? Doc, what's the name? Baby girl, what's the name? 7 pounds, 7 ounces. Cool beans. All right. All right, Jared wants to take a look at Micron. No. SanDisk. No. Live availability restricted. Your live is not eligible for recommendations and is restricted in the search result, as we have detected suspicious activity that may violate our integrity and authenticity policies if you think you made a mistake. You know, I get this thing about once a month. Appeal. All right. Whatever. I get that anytime you mention anything about money, taxes, insurance, something like that, we're dipping into someone else's pocket, somebody gets pissed. So I get a red flag. Anyway, so profit, 133. The investment, cost of the trade, including commissions and fees, 29.67. So what's the rate of return? Okay, here we go. 133 divided by cost of the trade, 29.67, comes to a grand total of 4.4% for 1 week. Actually, for 3 days. Because we got Tuesday, Wednesday, Thursday, and then the market's closed for the week. 4.4%. Yeah, I'm going to save this one. So apparently, I'm going to have to give someone a call or talk to someone, Because apparently if you mention anything about money, they automatically assume you're going to screw people out of money. Now, I've been doing this for over 3 years here live, so you would think over the last 3 years, wait a minute, this guy's been doing this for 3 years. It's not doing anything new. All right, so here we go. SMCI. Nothing that I would do, but if you like SMCI, here you go. 4.4%. Youch. One covered call, SMCI. 18 June. That's this coming Thursday. The 31 call option. Okay, if I'm buying it for $385, selling it for $31, well, it's a $133 profit. $2,900 is the investment for a 4.4% return for 3 days. I don't know. It doesn't make sense. Now, I'm not trying to sell you anything. I'm not trying to sell you this. You got to take a look at your own personal investments. Does it make sense or does it not? You either like the company or you do not. One or the other. So, 4.4. I'm going to save this one. That's number 2 for the day. Ooh, look at this. 4.1, 4.4. Nice. Next, what do we have next? Let me get rid of this. Get rid of that. Get rid of this. Bring that back to where we were. This back to where it was, right there. And tell me something good. TF. What is TF? I have no idea what TF is. Let's take a look. TF. Tough cookies. Nope, that would be TC. Tough cookies. So TF, instrument TF has no options. Yeah, so we're going to bypass this one. Next. Jake Dolan. What's happening, Jake? Nice to see you. Next. Righty. Imagine selling covered calls on MU. Well, let's pull up MU. Micron. Isn't that like over $1,000? Yeah. I don't know what crowd you're hanging out with, but $1,087 per share, you do realize that's a $100,000 trade. One contract, $100,000. I don't do stocks over $300 or $400. Sorry. However much money you think I got, no. I ain't buying anything over $400 a share. Sorry, I'm just not there yet. So, I'm going to say no to this one. And besides, I don't buy anything at the high. Okay, Micron, yeah. SanDisk, probably the same thing. SNDK. Here he goes. 2,000? Yeah. No. Greg, sounds good. Thank you. Tommy, yeah. Friday is the 19th. You got it. Okay. DJQ, A Random Walk Down Wall Street. Great book. Okay. Do they have it in an audio book? Okay, I have so many books I just can't get around to read. Jojo, how you doing? Levi, Dodrill, good evening. Double J2513, Duke Energy. Really? Isn't Duke Energy a monthly? D-U-K? It is. Okay, now, Double J, remember what I said? Rule number 4, weekly options only. Okay, June, July, September, October, December. Those are months of the year, and I don't do monthlies. Now, don't get me wrong. Not that they're not good companies, just that the money's not the same. Think about it for a second. Just think about it for 1 second. If I'm averaging 1 to 2% every single trade, monthly, 12 months. 12 months in a year. You all know that. 1 to 2%, 12 times, it's 12 to 24% by the end of the year. But think of it weekly. If I get 1 to 2% every week, that's 50 to 100% by the end of the year. The numbers just aren't the same. I just don't do monthlies. They're just not the same. Julius Caesar, how are you today? Spend a buck. Back again. I see that. Cool beans. Thank you there, Julius Caesar. Miami Wada Priestess. Cool beans. Thank you for that. Oh, that's so sweet of you. Okay. Dr. Corey. Yep, saw that. New York, New Jersey Motors. What's happening? Nice to see you. Oh, Dustin. The Gap. Ooh. Fall into the Gap. Oh, check that out. Now, that's cool. It should take you, seriously, 2 to 4 seconds to see what you need to see in a chart. Listen, just look. High, low, was, is. Look at that right there. Up, down, up, down, up. You can do all the little ones, but they're really not that important. The major ones, the big points. Up, down, now it's going up. This is the area that's the most important because this is the last 30 days. That's what's happening now. That's what's happening today. That's going to give me an idea of where do I think it's going next. Let's take a look. Wait a minute, before I do that. Okay, remember, first 2 to 4 seconds. Then I want to take a look at the numbers. What am I buying it for? 22.10. Come on. We all know the closest number to 22.10 is going to be 22. The 22s are selling for 32. That's 1.5% right off the top of my head. 1.5% is not bad for the gap, and it's a $10 stock. Wait a minute, is it? No, sorry, it's a $20 stock. It's a hell of a lot better than a $1,000 stock. Anyway, 22 bucks. All right, so last 30 days. 14. Damn freaking glasses. I hate getting old. Seriously, I wish I was in my 20s again. All right, over this side. Same thing. Chart, 30-day. High, low, was, is. Down, up, down, up. That's easy to see. Look, 30 days ago, we're here. Here's your 30-day bottom. Shoots up. Big drop. Now she's going back up again. 22.10. Well, 22.10 sounds good, so let's take a look. The 22s right there. Covered call right there. Get rid of this. The 22s are right there. Here it is. One contract, just in case you like it. And confirm and send. Always confirm and send. Read it out loud because your eyes can play tricks on you. Here we go. One covered call, the gap. 18 June, that's this Thursday. $22 call option. Okay. $28 is the profit. $2,100 is the investment. I'm going to need the calculator for this one. 28 is the profit. The investment, remember? Profit, 28. Cost of the trade, including commissions and fees, 2172. Divide 2172. Grand total of 1.3. Now 1.3 is not bad if you like the gap. Let's save this one. Fall into the gap. All right, back in the 80s, the gap used to be a big thing. What is it nowadays? I really don't know. Because, you know, I'm not at that point anymore where I have to impress anybody with clothes that I buy. You know, you get to a certain point, it's like, all right, I ain't growing anymore. I don't really need any more. Here we go. The gap. One covered call, gap, G-A-P. 18 June 26. That's this coming Thursday, 3 days away. 22 call option. Well, $28 is the profit. $2,100 is the investment for 1.3% for 3 days. Okay, we already did Micron. Okay, Micron's it's a little overpriced for me. 1.3. Uh-oh. 1.3. We got 2 more to go. We find 5 every night. So what are we going to find this time? What do we have? All right, what do we have here? Tommy Gold. Need any license? No. Miami Water Priestess. Good evening. All right, awesome. Welcome. Need a license? Well, thank you for sharing all this information in the manner we can all understand. Well, that's what we're here for. Aubins, Micron, no. MSTY, Brandon, it's time for my first guinea pig to pick on. I'm going to pick on you, Brandon. You know why? Because Brandon, MSTY is not a profitable company. Let me show you. I told you someone was going to do it. Remember, rule number 3, make sure the company's consistently profitable. Misty isn't. And let me tell you why. Let's go. All right. we got to get rid of this. Get rid of that. Go back to this, back to this, back to this. And we're going to go back to Yahoo Finance. And because the important thing you need to know, like I say, if you're going to be investing, you need access. MSTY. You need access to a financial website. Okay, so here we go. Yield max, MSTR, blah, 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 whatever. Right here, option income strategy ETF. You can call it whatever you want. I call it an electronically traded fund because that's basically what it is. Hold on, Brandon. Don't feel bad because I'm going to pick on you. You ready? Now, Brandon, what we're looking at here is every single dividend this company has paid out. Now, the reason why we're looking at every single dividend, Brandon, is because the dividend is the portion of the corporation's profits that they give back to us, the investors. So as an investor, if I buy Misty, MSTY, I'm entitled to a portion of the profits. I got a major problem with MSTY. HK Mike, want to get back to the, give me a second. Okay, I got a major problem with MSTY. I'm not going to go through the whole thing. I'm going to do a couple of things. Just a couple. Okay, you ready? All right. Do you see this right here? 4 June 2026. That was what? Last week, the week before? A couple days ago? Something like that? Hold on, Brandon. You see that? Do you see the dividend? I'm going to make it in big letters. You ready? Here we go. Here we go. The dividend right here. It looks good. 246, right? No. 0.246. It's 24 cents. Let's call it 25 cents. Give you the benefit of the doubt. Okay, Brandon? 25 cents. Right there. That's the dividend right there. June 4th, 2026. 25 cents. Okay. Sit tight. You ready, Brandon? Check this out. The very first dividend Misty paid out right here. $20.64. What are we doing right there? Okay, so explain to me, Brandon, if you don't mind, how could a company pay $20.64 the very first dividend, and now the dividend is down to 24 cents? Isn't that like a 90% decrease? 90% decrease. Read the numbers. 2064. All right, right there. Let's get rid of this. All right, Brandon, you ready? You guys ready for this? Check this out. The first dividend, April 24th, 2024. Company's only 2 years old. 2 years old. First dividend, $20. Second dividend, $12, $15, $11, $9, $20, $22, $15, $11, $10, $6, $6, $11, $7, $6, $5, $5, $3, $1, 96 cents, 84 cents. Where am I? Right there. 84 cents. 81, 74, 67, 58, 38, 40, 41, 30, 29, 30, 35, 48, 29, 24. How can you possibly look yourself in the mirror and say, hey, this is a great investment? We watched it go from $24 down to 24 cents, and you think it's good. I don't like Misty. I don't. It's 2 years old, and the dividend decreased over 90%. This is the part where we say, oh, hell no. What the hell were you thinking? Seriously. Joseph, Microsoft. No, I like Microsoft. Hold on, Brandon. Let's pull up Microsoft for a second. Leave it right here. MSFT. Now, Brandon, this is what I'm looking for. The rest of you guys, this. Watch, this is what I'm looking for. We're going to, first of all, we're going to look at all the dividends. Okay? Click on here. All right, maximum. Every single dividend that Microsoft has paid out. We're going to go back 20 years. Whoops. There we go. You ready? Brandon, check this out. 2006. That's 20 years ago. You ready? Check this out, Brandon. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. Every single year, year after year, higher dividends. That means more dividends, that means profits are increasing. You cannot increase your dividend without increasing the profit first. Because the dividend is a part of the profit that we get as the investor. We get it. So Microsoft, yeah, 25 years or more of increased profits. Yeah. Misty? Oh, hell no. But Microsoft, yeah. HK Mike 11, is that 4.1% in 1 week? No, Mike, that's 4.1% in 3 days. Monday's already gone. You got Tuesday, Wednesday, Thursday, and then that option expires. Deal with it, don't deal with it. Keep calling you Sparky. Thank you, AJ. AJ's mama. All right, what else do we got? Phil, thank you for that. She trades futures. Ooh, you trade futures. Cool beans. You should give me a buzz because I'm kind of curious. What do you know about the Commitment and Traders Report? Funny thing is, I talk to a lot of people who do futures, and I think one, heard of it, never used it, but heard of the Commitment of Traders Report. Now I'm thinking to myself, if you're a futures trader, you're not a real futures trader unless you understand how to read Commitment of Traders Report. Because that is a doozy. All right. Janderson, thank you for that. Mao Lin, good evening. Aloha, good evening. Oh, Nokia. Okay. Let's go back to here. Nokia, you say. N-O-K. Interesting. All right. First thing I want to see. Always. The high, the low. Where was it? Where is it? Up, down, up. Okay. There we go. Up, down, up. All right. Let's zoom into that last 30 days. Oops. Hey, when that happens. What do you think? Take a look. 30-day high. 30-day bottom. Where was it? Where is it? Look at this. Down, up, down, up. Well, you can clearly see that, but here's the thing. Remember, I'm looking for the 30-day bottom, 2 days to the upside. Here you go, right there, 1482. What is the 15s going for? The 15s are going for 41. Oh, hell yeah. I like that one. 15s going for 41. That's not quite 3%, but let's take a look at it. Nokia. Okay, covered call. There we go. The 1450s right there, one contract. Okay, there we go. And here's Johnny. Johnny, tell him what he's won. Well, Bill, we got Nokia. 18 June, 1450 call option, 64 is the profit, 1300 is the investment. What is the rate of return? Okay, calculator, if you please. Get rid of that. 64 is the profit. Remember, profit, max profit, 64. Cost of the trade, including commissions and fees, 1386. Let's do that. Low battery. How the hell can I have a low battery? All right. We're going to divide that by 1386. divide 1386. Grand total of 4.6%. Holy cow. Wow, a lot of weird stuff happened today in the stock market. Okay, 4.6. I'm going to save this one because I like 4.6. Nokia, 4.6. Now, the bad part about that is today's Monday. Almost all my money's done and over with on Monday. All right, there we go. There it is right there. Nokia, that was quick. Whoa, little too big. One covered call. Nokia. 18 June 26th. That's this coming Friday. This coming Thursday. The $14.50 call option. Here's my profit, 64. Here's my investment, 1386, for a 4.6. 4.6% for 3 days. If and only if you actually like Nokia. That's weird. Do you like Nokia? Either you like it or you don't. It makes sense or it doesn't. 4.6%. I should have waited longer. I did a trade this morning, and then the market maker changed the price right after I hit it. And instead of getting the 6 or 7% that I was thinking of getting, I got 1.3. Pissed me off. It did. Ooh, Cam SMR. Gotta love it. Okay, give me a second. I'm going to go over to the other channel and say hi to these guys over here. So let's see. What do we got? Who do we have over here? All right. Benjamin. Side Hustle 44. Thank you. You had it there. Okay. Woohoo. All right. Scott. Hello. Tucker Charles. SMJF. What the hell is that? Your screen text is reversed. Hey, thank you. Just know. Yeah, you're on YouTube. That's why. Okay. Thank you there, Daltron. Someone forgot about frames. Not quite sure what that means, but okay. SMJF. What the heck is that? SMJF. Okay, SMJF. What is it? SMJF. Hell no. 2 reasons. Who came up with this one? All right. Tucker Charles. Okay. If Tucker, this thing's $1 last year. Okay. It was $1 last year. And there's no options. No. Sorry. Greg. Hi from London. Tucker Charles. MEC. What the heck is that? MEC. MEC. Hell no. I don't buy anything at the high, dude. Look at this. The high of the year. Yeah. I don't buy anything at the high. No, no, and no. Andy Brower. What's going on? It's a marathon, not a sprint. Absolutely. Moderator, Sweet Dan. Thank you there, sir. Susan Rerel. Thank you. Esteban, why not sell more than one contract? Dude, Esteban, okay? I'm only doing one to give you an idea of what one costs, okay? There are sometimes I do 50. Sometimes I do 500. Do you really want me to show you what this looks like with 500 contracts? 500 contracts is 50,000 shares. Those numbers scare people. If I can show you one, you can take a look at your account and say, all right, I can do 3. I can do 44. I can do 713. We all have a different amount. If I'm showing you one, it makes an easier comparison. Okay? See, I don't share numbers because numbers can be intimidating. If I tell you I made $50,000 today, you're going to say, wow, that's great. But it doesn't mean anything because there's some pieces to the puzzle missing. So if I make 50 grand in one day, well, it doesn't mean anything until you have a way to compare it. Okay? Now, if I make 50,000 on 100,000, that's a 50% return. If I make 50,000 on 50 million, that's a 0.5%. That's not impressive at all. So if I tell you 1%, that's 50% per year. If you got $10,000, that's $500. 10,000. Oh, sorry, it's 5,000. So if you have 50,000, 50% a year is 25,000. Okay, if you got $1 million, 50% a year is 500,000. It's easier number to comprehend, not scare people away. Okay, so I don't tell numbers because they can be intimidating. Enza, good evening. Esteban, VC? What the heck is VC? Okay, hold on. I'm missing some. All right, Cam wants to take a look at MSR. Okay, so MEC is a no. MS. Try it again. Yeah, SMR. Okay. Interesting. Take a look. SMR. Top, bottom, where was it? Where is it? Look at this. Sideways down, sideways up. Okay. Interesting. Current price, 1064. The 1050 is going for 47. Now that's about 4%. Okay. Now I saw one of these this morning and it was like 7%. I said, oh yeah, I'm going to buy that one. So by the time I bought the shares, sold the option, the damn market maker brought it down to 1.3. Pissed me off because I tied up more money than I wanted to, but I wanted to take advantage of that 7% that I thought I was going to get. But no. All right. Take a look at this right there. Yeah, baby. Let's zoom into that and see what that looks like. Last 30 days. There it is. What do you think? Take a look. The top, the bottom, look. Down, up, down, up. We got all that space. The top is right there. The bottom is right here, and we're sitting right about here. We got all that space right there. This looks good. Now, it's not a tip. It's not a recommendation. I'm just telling you, by looking at the chart, 30 days ago we were here. We dropped, shot back up. There's the high of the 30 days. Dropped, found the new 30-day bottom. Now she's turning around and going back up again. This is what I look for. 30-day top, 30-day bottom, 2 days to the upside. 1, 2. So tomorrow is a good opportunity for me. You've got to figure out what's right for you. All right, so let's take these numbers. 1050. All right, let's get rid of this. Let's change this. Covered call to 1050 right there. One contract. Boom, 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 boom. La, la, la. All right, here we go. One covered call. SMR. 18 June. This coming Thursday. 1050 call option. 51 is the profit. 99. 999 is the rate. Is the investment. Okay. So, no, where did it go? There it is. Clear that. Okay. 51 is the profit divided by, okay, max profit, 51, divided by cost of the trade, including commissions and fees, $9.99, which is about $1,000, but we're going to put in the $9.99, and that's going to give me, holy cow, 5%, if you like SMR. And that's always going to be the catch, that last part. Do I like this company? Do I think this is a place for me to put my money? You got to answer that question. I can't answer it for you. I can't tell you what to buy. Is that a diamond earring? Phil, what are you paying attention to? Really? I'm showing you something interesting and you're interested in it. All right. 5.1. Yeah, I'm going to save this one. Of course I am. Oh, of course. Hey, horse is a horse, of course. And no one can talk to a horse, of course. Unless, of course, it is the horse, the famous Mr. Okay, here we go. Right there. And she should be popping up any second. Let's get rid of this. Let's get rid of that. Let's go back to this. Let's go right here. Here are the numbers right here. Johnny, tell him what he's won. All right, Bill, we have one covered call. Uh-oh. One covered call, SMR, 18 June 26th. That's this coming Thursday, 3 days away. The 1050. Look at this. Hold on. Look at this right there. 10.48. The current price is 10.48, and we're selling it at 10.50. 51 is the profit. $9.99 is the investment. What was that rate of return again? 5.1. 5.1% for 3 days. 3 days. 5.1. Uh-oh. Where did they go? There they are. $5.1. There's our 5. There they are. Lovely, lovely, lovely. What do we have now? All right, so let's grab a seat. Answer some of these questions. What do we got? What do we got? What do we got? Got. What do we got? What do we got? What do we got? Got. Oh, I got a low battery. I got a low battery. Why did I have a low battery? Okay, close that one out. Nobody's even there. All right, so questions. Tyson, hello. Someone forgot about frames. Your screen text is reversed. Thank you. Why not sell more than one? Esteban, we already talked about that one. Ken Tran, how you doing today? Family Lover, SNCA. What the hell is that? SNCA. SNCA has no options. No options. No, thank you. Sorry. Dvorky, Esteban, you can one at a time. Just keeps examples easy to understand. Absolutely. I know, right? That's his name. I know, right? That's a strange name. I know, right? All right. Hood. H-O-O-D. Robin Hood. What do we got? All right, there we go. No. Now, the reason I'm saying no to Robin Hood is check this out right there. Okay, this is today, right there. Okay, that's a year ago. This is today. Let's zoom in and I'll show you why. What do you think? Right there. I don't buy anything at the high. Okay? Up, down, up. That's the high, dude. No, thank you. Sorry. Esteban, how are you doing, my friend? I am doing wonderful. Spend a buck. Nice to see you again. Esteban, Vici. V-I-C-I. What the hell is that? Vici, Pity, Inc., Riet. Interesting, but no. Not saying no that I don't like it. No, because it's a monthly. Are you ready? June, July, September, December, January. I don't do monthlies. The numbers just don't work. Enza, nice to see you. Jojo, what are you using to look at charts? Jojo, right here behind me. That is called Think or Swim, and it's available through Charles Schwab. It's got nothing to do with me. I just like it. Okay, 18 years ago, I wrote a book on choosing the right trading platform for your style trading. All right. This is the one I like. Okay, I've looked at like 35 different trading platforms 18 years ago. This is the only one that I liked because it has everything that I'm looking for. It gives me my chart. Gives me my chart. It gives me my option premiums. It gives me my stock information. And then I can add some more screens on there too. So I can see everything I need to make a decision without having going from screen to screen to screen. Okay, Jojo. All right. Daisy. Thank you there, Daisy. How can you make me understand? Not a good thing to ask, especially when you're a girl. Not being sexist, but girls will understand this. Are you ready, Daisy? See if you understand this. And you guys, see if you can understand it also from a woman's perspective. Are you ready? Now, Daisy, I'm sure you've done this, or you know someone, one of your friends may have done this. Let me see if I can get it this way. You ready? Check this out. I'm gonna use the visual. You ready? Here's my visual just for you, Daisy. Oh, doesn't this look lovely? My coat and my hat. Oh. You buy it, you leave the price tag on it, you bring it back, you get your money back. Same thing. But here we're doing with stocks. I buy it for whatever price it is. Okay? I use it to get a premium, collect a little bit of money, and then someone gives me all my money back. It's called girl math. You go out, you buy a nice dress, nice pair of Jimmy Choos, nice little handbag. You usually look stunning. You get your pictures taken. Then all of a sudden, you bring it back, say, changed my mind, and you get all your money back. That makes sense, Daisy? Either you've done it or you know someone that's done it. My sisters used to do it all the time. So you can't afford it. Yeah, I know. I left the price tag on. I'm just going to wear it tonight. I'm going to bring it back. That makes sense? Let me put it in a way for you guys to understand. Okay, so I picked on the girls for it. Let's pick on the guys for a second. All right, guys, let's look at it this way. See if you understand it this way. You ready? Where'd you go? There you are. All right, Daisy, are you ready? Let's say, hypothetically, I have a 1968 Camaro convertible in my backyard. Nice car. Or a Firebird convertible. Whatever, Trans Am, whatever. Take the car, you push it out into the front yard. Slap a for sale sign on it, $10,000. Tom, 3 houses down, said, hey, I like your car. Let me give you a few dollars, 1%, okay, $100, $1,000, whatever. Hold it for me until Friday. If I come back Friday, I will give you the rest of the money. If I don't come Friday, you keep that money and then you turn around and sell it to someone else. Okay, week 2. Peter, 2 towns over, comes by and says, hey, I like your car. Let me give you a few $100. Hold it for me until Friday. Friday comes around. He's either going to pay you $10,000 for the car. Now, the money he gives you up front is considered as a non-refundable deposit just to hold it. Same thing. He shows up, gives you the 10 grand, and then you part ways. You get your money back. Same thing with the stocks. If I buy the stock, $27.99, however many shares I buy, $27.99, I'm going to sell somebody the rights to buy it from me at 28 or whatever the number is going to be. Okay, they give me money up front. I hold it for them until Friday. Because Friday, whatever the date is, whatever the date that we agree upon, that option is going to expire. So they're either going to buy it or they're not. They're going to release it. And if they release it, you get to sell it to someone else. So if I sell this and nobody takes it, I can turn around very next week and sell this. Very next week I can sell this, so on and so forth. I'm creating what's called a weekly cash producing asset. It's going to cost me, well, let's find a decent one because I really don't like this one. It's very difficult to, all right, ooh, AT&T, why the hell not? Okay, AT&T, $23.40. Okay, so AT&T at $23.40, I can sell it at $23.50, pick up for 14. That's terrible. Not the point, though. I can pick up that money every single week until somebody pays me the agreed upon price before the agreed upon expiration date. Hopefully that made sense. Mr. Wales. Outstanding. I just love, let's reply to Mr. Wales. Mr. Wales, I love your enthusiasm and your misappropriations. How's that? All right, back. Next one. Where are we? Here we go. And we're going to do this. Sorry, I don't like that. So let's do this. Confirm and get out of that. All right. All right. All right, we did VC. We did, all right, Mike. We looked at Microsoft briefly. Dual. What? Esteban, what is Dual? DUOL. 100. Oh, okay. Now, I've never heard of this company. Why is that? Duolingo Incorporated. Now, before I jump into this any deeper, I'm going to go to Yahoo Finance and put this in there to see if that works. DUOL. Whoops, wrong place. Yeah, there it is. Enter, and let's see what kind of dividends they offer. Oh, that's why I have no idea who they are. They have no dividends. So this is a dividend investing channel. Uh-oh. Gassenhausen. Gassenhausen? Interesting. SpaceX or Microsoft? See, I can't answer that question for you. SpaceX has been on the books for 2 days. Microsoft has been around for over 25 years. And it's a dividend aristocrat, which means they've increased their profits year after year after year for more than a quarter of a century. When has SpaceX done? So Gassenhofer, what I'm looking to do is a simple, safe, predictable, consistent 1% every week with companies that are consistently profitable. Funny thing about SpaceX, day 2, 0 profits. Now, they may have good profits in the future, but at this moment in time, 0 profits. So it would definitely be a Microsoft over SpaceX because SpaceX has 0 profits. Hang my jacket back up. What was I thinking? All right, here we go. So, that being said, next. Gassenhofer. QQQM. Oh, hell no. Hell no. All right, let's do this. You ready? Right there. QQQM. I haven't seen a single one of the QQQs at any kind of profitability whatsoever. So, here we go. 20 years. Oh, wait a second. Hold on a phone. Hold on. Okay, very first dividend was 2020. This thing's only 6 years old. 6 years old. No. 6 years old. I'm looking for 20 years old. 6 is easy. No. Hey, let's look at the dividends. 2015, that's a 25% decrease. Gassenhofer, from 20 to 15 is a 25% decrease. Why the hell would that interest me? Hold on. 18, 16, 14, 19, 20, 24, 27, 25, 21. No consistency whatsoever. No, and no. How do you keep track of all these transactions and how you profit? Obbins, let me ask you a question. Let me do this for a second. All right, Obbins, are you ready? This is how I keep track. Oh, hold on. Got to prove I'm human. I'm a meat popsicle. All right. How do I keep track? You ready? Here you go. All right. If I have $100,000 in my account and I'm looking for 1% this week, that, my friend, is $1,000. So Monday, which was today, I do most of my trading. 98% of all my trading is done on a Monday or a Tuesday. If I make $1,000 today, I got my target. Does anybody see the beauty in that, the simplicity? If I make $850, I didn't hit my target. That's it. That's the extent of my bookkeeping. What did I start out with? What did I make this week? It's either 1% or more or 1% or less. That's it. There's no complexity to my bookkeeping. At this point in my life, I don't have to do anything. The nice thing about being retired, I don't have to do squat. And I have my account set up in a certain way where I don't have to keep track of anything. I'm either making my 1% or I'm not. Let me show you something. Okay, right here. All right, I got something to show you real quick. All right, sit tight. You see this? All right, this is my website, the10minutetrader.com. You can check out, do your research. I've had this website for over 15 years. Okay, come up to the little burger. Going to go take a look at weekly trades for 2025. This was last year. Okay. Now, I share 3 accounts publicly. Account number 1, 151,000. Account number 2, 143,000. Account number 3, 114,000. So 1% is 11 hours. Okay, 1% would be 1,100. 1% would be 1,400. 1% would be 1,500. Okay, that's my goal for each account. All right. Let's slide down a little bit. Let's go down here. And where do we end up? Oh, here we go, right here. You ready? Week 19, week 6 for the second quarter, May 5th through May 9th. Anything you see in red, I sold. Anything you see in green, I bought. 3.61%, 1.16%, 1.46%. Hold on. What does it look like? Here we go. You ready? DVN. X is U.S. Steel. Riley. Kohl's. Riot. Riley. Harley-Davidson. Macy's. Alcoa. Here's the profits right over here. Over here is the timestamp. The date and the exact time, what kind of strategy it was, how many, and the expiration, and the call or whatever. Okay, that's that one. Whoops. I get used to this. All right. This account here, what do we have? Mara, Riot, Macy's, Kohl's, Harley-Davidson, Macy's, ASO, Mara, and Riot. Okay, this one only did 1.16. Now, I used to keep track of them for investors, for those people like you who say, hey, how does it work? Well, there you go, right there. All the numbers are there for you. Okay, this is week number 19 for the year. Week 4, oh, wait a minute. Week 17 for the year. What do we have? 0.65. Look at that. I didn't get my 1% this week. I only made $1,100. Oh, boo-hoo for me. 1.92, 2.74, 1.4, 1.7, 3.9. All the numbers are there for 24 and 25. I did it for 2 years. I just don't feel like doing it anymore. The numbers are there. Check it out yourself. I sold 10 contracts for SMR today. Cool beans. Okay, got that one, got that one, got that one, got that one. Which companies were 1 and 2 today? We discussed, please name again. I'll get it. Jojo, thank you. You're welcome. Andy says Bull. One of them was Bull. Oh, boy. I'm with you, Daisy. Thank you. Dustin Easter. Okay. SMCI. Yep, that was one of them. What else? Mr. Oh, I got that one. No sound. Uh-oh. Why is there no sound there? Why do you divide with the amount lower than the call price? Ooh, Cooney. All right, let's go back to, where are we going? Oh, there. Let's do Ford. All right, there's Ford right there, 1477 to 1450. Let's do this right here. That right there, the 1450s. There we go. Get rid of this. All right, let's do 10 of them. Why not? Okay, so Kuhnel, is that right? All right. Why do I divide the lower amount? You mean the profit? Why do I divide the profit by the investment? That gives me the rate of return. Okay? My max profit right there, $150. Okay? What was my investment? My investment was $14,000. How else are you going to figure out what your rate of return is? If I buy something for $1 and I sell it for $2, that's a 100% increase. Okay? 1 divided by 2 is 100. That's 100% profit. Okay? So in order to find out the rate of return, you take the profit and you divide it by the investment. The investment should be the share price. Yes, but it's the share price multiplied by 100, because one contract is 100 shares. Okay, so let me read it to you again. Okay, by 10 covered calls. 10 covered calls. Whoops. Okay, 10 calls is 1,000 shares. Okay? One call is 100 shares. So if I'm buying it at 1477 multiplied by 1,000 is 14,356. Because you got to remember the taxes, the fees, and all other crap. Okay? So whatever the stock price is, whatever I'm buying it for, you multiply it by how many shares you're getting. So if I'm getting one contract, that's 100 shares. 1477 times 100 is 1,477, but you got to include the commissions and fees. That's why I say the investment is blah, 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 plus commissions and fees. Hopefully that made sense. All right. Next. The investment should be the share price. Yeah, I get that. The share price plus commissions and fees. Right here. Cost of the trade, including commissions and fees. Okay, the cost of the trade, the commissions, the fees comes to 14,356 for 1,000 shares of Ford. And if I sell it at $14.50, I bring in $150, whatever that rate of return is. Hopefully that made sense. Next question. Bit2 wants to take a look at Dividend. What website do you use? Dividend, that's not a website, that is a trading platform. Bit2, BX. Isn't that Baxter? Or is that Blackstone? Blackstone or Baxter? Which one is that? BX. Anyone know? Top of your head. Top of your head. Top of your head. BX. I think it's Blackstone. BX. Blackstone. All right. So Blackstone's going to be a no only because it's at the high. Yeah, no thanks. I don't buy at the high. Engineerio. Path. Still no? Okay, Path. What the hell is Path? P-A-T-H. Interesting. UPath. Okay. $10.80. The 11 is going for 18. That's good. But what's going on right there? Let's zoom into that. Let's zoom in. Oh, only one day up. Okay. Bottom, top, bottom. Shoots up, pulls back. Now it's only one day. If you like Path, I like 2 days to the upside. So closest I'd get into this thing would be probably Thursday. IE. Okay. Uh-oh. All right, back. So you got that one. Blackstone. Got it. All right. OSCR. OSCR. Ooh, my baloney has a first name. It's OSCR. Wrong one. OSCR. OSCR. Here we go. Here we go. Here we go. Hell no. I don't buy anything at the high. Sorry. Trenton, what about I just make 900% a day with one stock? Hey, great idea. You have fun with that one. IE, what is that? Monthly. No, thank you. Who came up with that one? Yeah, no, thank you. T-Money, Coca-Cola. Ooh, big drop. Look at that. Bottom, top, big drop. No, thank you. Earwick, SpaceX options. How do you feel? SpaceX doesn't have options yet, dude. We're day number 2. Give it a little bit of time. Can we do ALB, Able Mile? Ooh, ALB, Able Mile. Ooh, unfortunately, looks like she backed up today. Take a look. Up, there's your 30-day top, 30-day bottom, back up. But today, she's dropping. Nope. Righty. Right along, Willie. What's happening, right along, Willie? CMG, Carnitas. Nice to see you again, brother. CMG. Isn't that Chipotle? CMG. Chipotle. Ooh, take a look at that. The high, the low, up, down, up, down. Look at this right there. What's going on right there? That looks kind of interesting, doesn't it? There you go. I don't know. Looks like she might be done. Is it Mr. Strong Vision? If you sell a stock at a loss, you can use that loss to offset capital gains, reducing your tax bill. That's tax loss harvesting. Okay, thank you for that. However, I don't like taking losses. Rule number 2, never sell at a loss. And that's just my philosophy. Okay, Mr. Strong Vision. That's just my philosophy. I could be wrong, and I have no problem being wrong. I've been wrong once or twice. CMG. Why do you always divide the sum lower than the share price of the call? Oh, we just did that question. GRRR. What the hell is that? GRRR. What is that? Gorilla Technology. Never heard of it. Okay. Last 30 days for Gorilla Technology. Interesting. Bottom, top, back down, back up. Here's your 2 days. 1, 2, 3, right there. 1749 to 1750 is going for 25. That looks good, but I have no idea. Rule number 1 is never buy anything you don't want to hold long term. If you don't know who they are, don't buy it. I have no idea who they are. Can we go over the first and second zoomed in? Hold on tight for a second. Okay, Rode, Nokia. We already did that one. Yep, we already did GRR. Already did that one. Gringo, what's happening? P-Tech, thank you. Righty. It's a no. Thank you there, Michael. All right. KHC. That's, hold on. KHC is Kraft Heinz Ketchup. Yep, okay. SpaceX, buy or no buy. I can't tell you to buy or not buy SpaceX. Sorry. It's day 2. You really want to buy something on day 2? Great information. Papa Joe, how you doing? The artist, WTF, it's JoJo. I'm new. Cool beans. Nokia's call is $14.50, but why did you divide the premium by the lower price than the call price? Let's take a look at it again. NOK. Okay, so if we're looking at Nokia, what one? The $14.50? The $14.50 is 66 cents per share. Okay. Now, if Cooney, I'm going to buy this. Let's get rid of this. Change this to covered call right there. Now, the current price, $14.56. I'm going to do the $14.50s. There it is right there. So, right there, $14.50. There we go. One contract. All right. There we go. So, you're having an issue with taking the $62 profit, because that's what the profit's going to be, by the investment, which is the cost of the trade, including commissions and fees, $13.88. Well, how else are you going to figure out what the rate of return is? Cooney, seriously, how do you figure out what the rate of return is? You take the profit, you divide it by the investment, that gives you your rate of return. That's why you invest. That's why you divide the profit, max profit, 62, by the cost of the trade, including commissions and fees. If I buy something for $100 and I sell it for $25, how do I figure that out? You take the 25, you divide it by 100, and that 0.25, which is 1/4. It's monthly. No, Yuri, it's weekly. Yuri. All right, Yuri, you ready for this? Oh, wait a minute. You're talking about AEP. Oh. All right, AEP. AEP. Oh, yeah, AEP is a monthly. June, July, August, September, November, December. Yeah, I don't do monthlies. So I think that's it. Oh, wait a minute. Holy shit, I got more questions over here. KHC, already did that one. Great information. Thank you. Got it. Good. All right, you got to divide the premium by the cost of the shares. Exactly. OSCR, we did that one. We did that one. SS Funny Farm, KHC at 6.5. I seriously doubt that one. KHC. Covered calls, single. All right. Who came up with KHC? All right, Funny Farm. Are you ready? KHC is $24.03. That's the current price. $24.03. If I buy it at $24.03, I'm going to sell it at $24. I'm going to bring in 24 cents. That's 1%. Sorry, 1%. 24 cents is 1% of $24, not 6.5. 6.5, you might be looking at the yearly yield for the end of the year. The yield at the end of the year. Yeah, it's 6.5. But we're doing weekly. Weekly, 24.03, the 24 is going for 24. That's 1%. 1% times 52, that's 52% per year. Not 6.5. You're counting the dividends. I'm not counting the dividends. I'm counting the premiums. Okay, there's a big difference between the premiums and the dividends. Answer the question, is that a diamond earring? Yes, it is a diamond earring. Why is that so important? Seriously. SpaceX doesn't fit this strategy. You're absolutely right, it doesn't. Greg, you want to learn how to covered call? Yeah, you look in under, what do you call it? YouTube. Hundreds of videos. Cameron, VC underperforms, but it's nice for big investors because of its 6% dividend. Yeah, VC didn't work for me at all. Sorry. Aris Brasol, when you say you have to ask yourself, do I like it? Please explain, what do you mean? Oh, that's an easy one. Are you ready? Let's take a look at this. This is Kraft Heinz, KHC. Now, it's kind of a strange question because the question was, when you say you have to ask yourself, do you like the company? Kind of like this. Are you ready? KHC. It's over 100 years old. It's got 5 decades of increased profits. If I buy it today, I'm paying $24.30. I can sell a covered call at that, bring in 1% a week. That's 50% by the end of the year. The stock doesn't have to do squat. Do I like this company? What do? They make ketchup. They make Heinz 57 sauce. They make mustards, mayonnaise, all that kind of condiments, all that kind of nice stuff. But do I like the company? It's a personal decision. You either like it or you don't like it. It's actually that simple. You like the company or you don't like the company. SpaceX options tomorrow. What's the play? No, there's no options on it yet. You have to be willing to hold the stock for a long time in case it dips. Well, not only that, never buy anything you don't like. If you don't like it, if you don't understand it, you shouldn't be buying it. Okay? AEP. You either know who they are. Okay, who knows what AEP is? I have no idea. Kraft Heinz, I know who they are. They make Kraft ketchup. They make Heinz ketchup. They've been making Heinz ketchup, my Heinz 57 sauce, ever since I can remember. Over 100 years. AEP, no clue. None whatsoever. AT&T, they do telephones. I understand that. I like that. That works for me. Home Depot, oh, they sell products to help me work on the house. I understand that. You either understand what they do and you're okay with putting your money into it, or you don't understand it and it's a no. Because I say no a lot. Not enough data. Thank you, Carita. How about Shop? Shop hasn't been around for 20 years. Plus, we're way past 11 o'clock. I'm just being courteous by answering the question. Are you making decisions based on a weekly or monthly chart? Corn cars. No, no, and no. I make my decisions on two things and only two things. Are you ready for this? You might want to write it down. It's kind of interesting. 2 criteria for the stocks that I pick for myself. Now, you got to remember, everything you saw tonight is what you guys wanted to take a look at, not what I wanted to take a look at. I get 2 criteria and only 2 criteria. Are you ready? And it's really simple. Is it okay to sell cash secured puts? Absolutely, Joe. I like cash secured puts. I just don't teach them here. I teach one strat. I give away one strategy, Joe. I give it to you for free. I'm not asking for anything. I give it to you for free. Okay, there's a lot of strategies, but I give you this one for free. All right, so the question is, do you like it or do you not like it? I got 2 criteria. 2. You ready? Number 1. Is the company consistently profitable? That means, have they increased their profits year after year after year after year after year after year after year for 2 decades? That's 20 years. For those who don't know, that's 10, 20 years. 20 years of consistent profits. That's number 1. Number 2 is, do they have weekly options? That's it. 2 criteria. Consistently profitable for at least 2 decades and weekly options. That's my whole criteria. That's it. It either fits or it doesn't. Thank you, Joe. KJ, thank you for that. Caritas, you're welcome. What am I explaining? I'm explaining dividend investing for weekly cash flow using nothing but pre-qualified dividend stocks. Those are companies that have increased their profits for at least 2 decades and consistently increasing year after year after year. Also, a covered call just before the EX date, and that's based on the calendar. So once you take a look at all the companies in the stock market, 11,250, that's a lot of companies. Just throw into the calendar which ones are profitable, which ones are not, when is the right time to buy, when it's not. So yeah, the whole thing, less than 2 minutes. There you go. Is SpaceX bubble along with the other AI infrastructure? No idea. I don't buy things that haven't been around for a while. So SpaceX for me is probably going to be a no. eBay, we'll have to take a look at that next time. Hey, James, when you get pinned by a strike, what you do, just hope you weren't assigned, roll the dice. I'm not quite sure what you mean by that, but okay. Thanks for sharing your knowledge. Nice going, Mr. Stronghold Vision. Ingenio, I wonder what news Nokia has, though, and what the Federal Reserve will say hump day. Hey, we'll find out. Okay, view more, Amazon, AMZN. We'll take a look at it next time. AMLP, no idea. Massier, I have no idea. Unknown, okay, cast, blah, 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 blah. But this requires a lot of capital to make money. No, don't. I created a trading strategy for my 9-year-old daughter. How much money do you think a 9-year-old has? Then I am actually in the middle of creating a trading strategy specifically for my 6-year-old grandson. How much money do you seriously think a 6-year-old has? Come on, let's be serious. What I'm showing you here is my rendition. I'm 62. I got plenty. I put in 5 decades. I get over 6 digits. So yeah, I'm showing you what I do. Okay, now I have a couple other strategies and those aren't here. Did I get into SpaceX? No. I don't do IPOs. I like 20 years of profits. Kroger, we'll take a look at it tomorrow. KJ, thank you. Breaking down stock, blah, blah, blah. Thanks, James. I hope to master this as much as you have someday. Always appreciate this. Hey, Side Hustle, you're welcome. Remember, it was created for a 9-year-old. You know what? We haven't done this in a while. So let's go and take a look at the little princess. So some of you who have no clue will see this. All right, let's go. YouTube. Okay, that's my YouTube channel right there. We're going to take a look at videos, the oldest videos. Here's the little princess right here.
Part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of
Let's go back to the beginning.
stuff. Hi, I'm JC, and being part of my internet website club thingy,
When she was 9, she said, Daddy, can you teach me?
But I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose.
Okay.
And
over
there's
20
me.
days in the month of January.
Look how much hair I had back then.
Where did
it all go?
That means every single day.
My favorite part's coming up. Hold on.
There's a different company paying out dividends. Anyway, no. Seriously.
Okay. So 18 years ago, me and my daughter put the video together because I had to make it fun and exciting for a 9-year-old. Well, how else are you going to get a 9-year-old's attention? And then how are you going to hold on to a 9-year-old's attention? It's got to be fun. It's got to be simple. It's got to be safe. It's got to be predictable. It's got to be consistent, and no way for her to lose. All right. So that's going to be it for the evening. You guys have a great day. We're going to do this all over again tomorrow. Have a nice day, everyone. And where are we? We're going to go to this. Come on. Oh.
See this scratch? Auto shops will easily charge you $2,000.
This is what I
You
want.
dream in stars
Have a nice night,
and
everyone.
dive into the deep, fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain, building your legacy through love and brain. Julie knows that fire in your soul, the kind that lifts the broken whole. James, you reach the skies no one dares. In your hands the future's caught unawares. That's to know what the hell were you thinking. You laugh as the yacht keeps the daylight blinking. Every day's a quest, not some disguise. With James in the storm, the dream never dies. Retired, you say, with a wink and a grin, but the podcast is rolling, pulling us in. Your compass is love, with your kids as your guide, charting seas wide with vision and pride. Julie's here, who adores your spark, the dreamer who lights up the dark. James, you reach the skies no one dares. In your hands the future's caught unawares. That's to know what the hell were you thinking. You laugh as the yacht keeps the daylight blinking. Every day's a quest, not some disguise. With James in the storm, the dream never dies. Tethered lights still flying high. You kiss the stars, but never say